back to you in a bit and get some more ideas going. But let's also analyze a lot of the results, the earnings and the stocks that are in focus, starting off with BHEL. As we've been telling you, there's been marked disappointment on the stock right from the morning. It's still down about 5%. Now, the thing is that the numbers didn't add up. There was disappointment on basic P&L, though the management commentary is still very optimistic. Obviously, they're dealing with a very large order book. But the market is not willing to take on board the fact that there was P&L misses in a quarter, whereas I've been saying a lot of other PSUs have done really well. Let's go across to Vamakshi and get the breakup going. Vamakshi, so what's the analysis?
Well, absolutely. Like you rightly pointed out, in a quarter where a lot of counters like ABB and Siemens are reporting good set of numbers and margin surprises, BHEL on the other hand has reported a weak set of numbers across the board. Revenue for the company came in at 8,260 crores. This is 7% below what the street was expecting. It has been a very sharp disappointment as far as margins are concerned. We were expecting a number somewhere around 14%, but the margins this time around have come in at almost 8.8%. In fact, on a year-on-year basis, margins have declined by almost 400 basis points. EBITDA has come in nearly 43% below, and net profit has come in nearly 41% below what the street was largely anticipating. The receivables also continue to be elevated for the company at almost 8,010 crores. But the positives this time around was the strong order inflow. Their order inflow in the fourth quarter surged up by almost 4 times on a YOY basis, and in fact, this is the highest ever quarterly as well as yearly order inflow. With that, the order book also was at a decadal high at 1.31 lakh crore. The commentary also was positive. They believe that 12 to 15% revenue growth CAGR could be expected over the medium term. The gross margins had been declining for the company, but that is now expected to turn. In fact, they're expecting 10 gigawatt of ordering every year for the next couple of years to continue, and they have 80 train sets of Vande Bharat in their order book, the delivery of which is expected in June 2025. The revenue recognition is expected to start then as well. So overall, the numbers were quite weak, but the positive this time around was on the order inflow as well as the commentary. In fact, we also have an opinion coming in from Macquarie. They say that the EBITDA margin weakness was in sharp contrast to some of the other names that have posted good numbers so far, and they believe that the order inflow outlook is quite healthy, but there is a presence of multiple moving parts. The order backlog is also sort of long gestational period. So overall, that is the reason why they're quite conscious on the margins as well. So overall, Macquarie has given an underperformed rating on BHEL, target price of 192 per share.
Okay, thank you very much for joining in. Dilip Bhatt is